Alex with MasterChartsTrading.com, and this is market recap for Friday, November 29, 2019. As always, please hit the like button, subscribe to this channel, and share this video with others. Stocks are basically making new highs non-stop. All kinds of negative narrative there just doesn't matter. We'll look at some of the offensive sectors, such as technology, industrials, and financials, as they hit new records. Not far behind them is consumer staples and healthcare, also at records. So healthcare is probably driven partially at least by the biotech. We'll look at the biotech trade, up over 12% in a few weeks. We'll look at Hong Kong and Chinese shares and see if they're opportunity or perhaps we should avoid them. Now the trade example I'll show is Google, another 12% gain recently. Natural gas, I think, is being shorted by aggressive sellers right now, and we'll see if the dollar and euro, as euro is finally bottoming or not. And we'll look at gold. Finally, we'll look at cryptos, and it looks just ripe to be shorted right now. Okay, so let's look at S&P 500, ETF SPY. So there's our proxy for the market. S&P 500 is at new records. Just yesterday, or rather just on Thursday, on Wednesday, they were set. No trading on Thursday. It was Thanksgiving. Today was a short day, but overall still very strong chart. So obviously it is overextended. Obviously there will be a pullback from what levels I don't know. But if I had some positions that are just super great, for example, here's QQQ, and you can see NASDAQ 100 ETF. There's an actual alert on the 4th of June of this year, and it just keeps going. So it's 18% gain already. It just keeps going. So potentially maybe you want to take profits, but who knows, maybe they'll continue another 18% before the pullback of any sort. Dow Jones also very nice move higher at record highs. Our latest alert was back in May. Good for about 12% gain, so also pretty nice. This is also not including the dividends, so additionally you'll get dividends. Overall, stock markets are obviously bullish. We should be looking to buy. Again, I don't see any tapping patterns. So even this little blip or pullback was immediately bought and I got new highs. The only thing I can say is that we're a little overextended to the upside, so a pullback of some sort will materialize, I think. But overall, the market is very bullish, and we are continuously looking for opportunities to buy. We're not looking for any kind of opportunities to short. Here's another example, XLK technology sector. This one alert was sent back in June of this year. You can see the trades I have are pretty long-term in nature. Also, again, I forgot to mention that the lines you see on this chart, the green, the blue, the red, and the yellow lines, they are available for TradingView. So if you have a free TradingView account, you can just get a free TradingView account like this online. It's TradingView.com. Sign up at MasterCharts Trading afterwards, and you can have the same indicators that I'm showing you. This parallel lines to one another. You can have them on your chart, trading indicators. Okay, so XLK technology at records. This is showing very good appetite for risk. People, or the investors, are believing that the future is bright. They will continue buying at such seemingly elevated levels, but Even a little bit earlier back here in July, those were also seemingly elevated levels. And notice what we're having another record highs, new record highs, new record highs. So I again wouldn't look for any kind of tap-in patterns. I would only look for opportunities to buy if there is going to be a pullback. Here's industrials, also another offensive sector. In other words, it's a high beta stocks that are in this sector. So here we see two alerts, one back on 30th of May. Again, these are actual alerts to my subscribers. One in May and another one in August. Good for about 13% gain. So same general principle. We're not looking to sell. We're not looking to short. We're just looking to buy on any pullback. Here's a very nice move. XLF Financials, 4 alerts. One in May, and then several in August here. The August alerts were just very quick, very nice. 14% gain, and it's still going higher. I don't see too many reasons to sell yet. XLP, this is staples. Now, staples are considered, consumer staples are considered more of a defensive sector, but it it's still stocks. It's not like defensive bonds. It's still stocks. So overall, here's a couple of alerts. One in March, another one in February of this year, and it just took off. So again, all I'm looking for is a close above the blue line. You can see the blue line right there. You can see a close above it, and this is all we do. We just buy and close above the blue line. Usually it goes in our favor. Around 80% or 75% of the time, you can get very nice moves, or at least you can break even. But because quite often you get very nice moves, you make quite a bit of money. It just depends on your skills as a trader, where you take profits, etc. Overall, the longer you hold stocks, the better, generally speaking. Here's XLV Healthcare. Notice a bunch of alerts, and you can see this is all I do is I'm looking for a close above the blue line, and then we just buy it there. So the latest 3 alerts, you can see we're back in August and early September, and XLV Healthcare just went to records, and we got 10% gain out of this very nice trades. Simple. You don't need to really think too much. I like to simplify things. So you can see that I don't have any kind of MACD or any kind of moving averages on my charts. I only have the 4 lines. And the 4 lines, they just help me decide where do I want to buy, where do I want to sell, um, whether I want to buy or whether I want to short sell. So overall, when I started using my own indicators, life became just so much easier, and I'm no longer worried about various indicators which completely conflict sometimes with one another. So overall, again, I try to simplify things, and I try to help my subscribers at MasterChartsTrading.com to do the same thing. Simplify the trading, don't overthink it. Here's another alert, XBI Biotech. Again, recent alert, very simple. You can see right there on the 1st of November and another one on the 8th of November. Straightforward, we just buy and close above the blue line. When the stock moves in our favor, we advance the stop, Eventually we take profits and close the trade. But overall, it's very simple. If we are trying to sell short, we'll be doing the opposite, and I'll show you once we get to Forex. I don't try to sell short stocks because I think um, during the bull market, and right now we have a bull market, stocks just generally tend to go up, so there is going to be resistance to shorten stocks. So why bother with that? You just keep buying them basically. Um, the opposite could be true once we sell off to the yellow line. Maybe we'll bounce towards the red line and then we can short. But we need to see a major reversal on the entire stock market before we start thinking that we're in a bear market. We're not in a bear market. We're in a bull market 100%. So let's look at some of the foreign stocks that's been in the news, and here's one that's of interest, and that is Hong Kong. So this is EWH. This is um, foreign equivalent traded on the United States markets. So this chart, let's look at the lines. So we're looking at the green, the blue, the red, and the yellow line, and let's make an analysis. So you can see that basically the stock has been in an uptrend because it's been closing above the blue line. Here, back on the 14th of August, where I'm hovering, we almost closed below the yellow line, and yellow line for stocks is my line in the sand. This is where I say, okay, this particular security is no longer in a bull market. But it didn't. So right there on the 14th of August, it tried to close below the yellow line, but it failed. So as of right this instant, I'm still thinking that Hong Kong shares are in a bull market. Can they collapse and continue lower? Absolutely. They also have an equally, if not greater, chance of going higher and closing above the blue line. Again, why am I saying greater chance? Because during the bull market, and we're seeing bull market worldwide pretty much. I mean, there are some pockets of weakness, of course, some sectors of weakness, but overall, vast majority of stocks in the United States and the vast majority of stocks in the world are in a bull market. In other words, they're going higher. So right this instant, EWH, the Hong Kong, is basically in a caution phase. We're below the red line, so this is caution to me. If we close below the yellow line, we're going to be in avoid phase. In other words, it's most likely in a bear market, but I don't want to short it, so I'm just going to avoid it and do nothing with it. So as of right now, there's a still possibility that stocks in Hong Kong will continue above the blue line and then eventually break higher. Overall, it's not a terrible chart, but it's not a great chart yet. Chinese shares, FXI, the large caps, are looking actually a little better than the Hong Kong ones. You can see an actual breakout, what I thought was an actual breakout right there on the 7th of November, but then we are seeing a pullback. So right now, a pullback is just that. It's a pullback. I don't see a bear market in Chinese shares yet. See back here in August, it says avoid, and until we see a close above the blue line, like what happened right there on the 7th of November, I would have avoided it. This might send to my subscribers as well. So right this instant, I would just wait and see which way it will break. Uh, I mean, I mean, I heard there are tensions in the Hong Kong, and various world events are moving the markets up and down. But overall, I think it's still a bullish chart, so we should be looking to buy it. So another trade example I wanted to show, and just the way I think about trading as well. Here's Google, and here's interesting part right there on the 3rd of June. I sent an alert to my subscribers, avoid if closes below the yellow line. It didn't. So at that point, we just like, okay, we were very close, but it didn't break down. So I would have kept my position from the alert back in May, and I would have been rewarded because you can see that it, it it went higher, and then several more pullbacks, like for example one in August, late August, and the latest one was really nice here in October, on the 3rd of October. So the 3rd of October push higher actually resulted in over 12% gain. And again, this is all I do. You just put the indicators on your chart, and again, you can put these indicators on your chart. Just go to Master Trading, sign up, and then I will open the door for you on TradingView. And that's it. You know, we buy, and we sit and we wait. We got 12% gain already in our favor. All right, let's switch gears a little bit and look at commodities. Here's natural gas. Natural gas, I think, is in a bear market. And before, you know, way back when in August, I put down basically that these lines are places or levels where where short sellers should step in. So here in the yellow line, this is aggressive short levels. And you can see that this was already probably successful if we shorted here on 24th of September. And right now, I think short sellers are again stepping in, and you can see the prices are pushing lower. So far I don't see any reversals on the natural gas. In fact, if it gets to about $3, I think we would want to be shorting it. All right, let's continue to Forex and gold. Here's DXY, dollar index, kind of chopping around. Latest candle looks promising to the bears. It could continue lower from here. I mean, right this instant, it's in a bull phase, and this particular security, if you could trade it, um, you know, I would be buying it around the blue line. For example, here is a potential trade right there on 21st of November, and would have been already profitable, basically. Now, I keep thinking the dollar will turn around and it keep not doing that. So I think we should look to euro for major clues because dollar index is basically over 50% euro, if I'm not mistaken. Euro right now made a low in October, bounced towards the red line, got shorted there mercilessly, still making lower lows. For example, today was a lower low from those previous opportunities to short from November and October, and still no turnaround. For euro to turn around and be in a bull market, it needs to close above 1.13 currently. And that's just not happening, so I guess we're gonna have to keep a bearish outlook for now on the euro. Here's gold, XAU USD. Not yet a chart I want to trade. I want to at least see a touch of the blue line. Um, you know, this particular chart just basically trading sideways, but it's moving lower, and I want to first see a touch of the blue line and then a rally above it. That would be an ideal situation. It's not happening, so we're gonna just need to sit and wait. A lot of waiting and trading. All right, and finally, here's Bitcoin. Um, so Bitcoin, I actually sent an alert right there on 21st of November. I would have shorted it right there. Good for 13% gain. Right this instant, you can see the price pulled back, and now we want to see if it rolls over. It's really ripe to roll over. If it closes below the red line, which is currently at 7626, I would be shorting it. Or rather, I would be shorting it if I had access to the margin account. Some trading, um, um, some new trading exchanges, they already allow shorting of the cryptos, so we can go both ways. You know, you have to check with your exchange to see if you're allowed to short. Um, then we can try and make maybe trade a short on the short side. Litecoin is already at new lows here. I kept saying way back in September that it's about to collapse. It collapsed 30%. I think it's going to be another 30% down. Same goes for Ethereum. It collapsed 30%. I think another 30% could be easily continue lower. Okay, so that's it for this week's recap. Head over to MasterChartsTrading.com, that's MasterChartsTrading, one word.com, and click on sign up. So right now we have three different services. We have alerts. Okay, so alerts are something like what I was just showing you. For example, for Google, there's 12% gain, or you know Excel XBI biotech ETF. There's another 12% gain. So things of this nature. Those are called alerts. And I send alerts on all kinds of securities, lots of good opportunities. Literally daily there is something interesting and exciting to trade. Now, if you're ready to trade on your own, you can get trading indicators, which are these lines. You can get them on your chart. They will be calculated on your chart. This is not a drawn, they're not drawn by hand. They are actually mathematically calculated. You can see Master Charts Trading, price action indicators. You can also find me on TradingView, and just chat with me if you're interested. My chat, my name on TradingView is MasterCharts, so find me at TradingView as well. Now, if you're ready to trade and you want to do the indicators, you can do both alerts and indicators. I think it's the best deal at $49.95 per month. You get not only you get to trade on your own, but you also get tons of examples that I send on daily basis, because all of the alerts also get duplicated on the members only blog. There's also a training library, and you can get all kinds of good information, and you can contact me if you need anything special. For example, sometimes people want to get their own stocks analyzed. I occasionally do it, so send me a note and we'll talk. Okay, so that's it for this week's recap. Again, what's coming is I wanted to mention right now it's kind of basically a shutdown because of the Thanksgiving holidays, but December will be very busy for us, and we will be continuing to develop the algo trading. The algo trading, I mean, even right this instant, we can probably launch, and it looks just great. What we need to do is we need to do a little bit more testing, a little bit more back testing, but overall the results are just great. We could be making good money for our subscribers, and hopefully for the uh, trading fund once it has been organized, and we're hoping to do an ETF eventually, not this instant, but it is not impossible and we're working in that direction. Again, stay tuned, sign up, and you can start using the indicators right now on your own. You can start using these indicators on your own right now, get my alerts, etc. So also NinjaTrader, MetaTrader, and Expert Advisor from MetaTrader are coming. This may be somewhere in, maybe January, February kind of area. If you're looking to basically make some money, we are looking for commissioned affiliates. I will eventually have a sign up link. But once we have the products, the product would be algo trading and the various indicators. I mean, we already have the indicators for the trading view, but once we have more converted platforms, we will be looking for commissioned affiliates, promoters, traders, brand ambassadors, people who have some sort of a social presence, and of course financial industry professionals. If you're interested, we can partner up. Technology can also be exported if we find the right partner. Okay, that's it for this week's recap. Again, if you have any questions, please send them in. Thanks for watching. Bye bye.